Now, November is Financial Planning Month, but many South Africans may still be wondering what financial planning really is and what it is that they should expect and experience when taking on the services of a financial planner. Joining me in the studio to take a step-by-step look at the process required to build a sound financial plan is Warren Ingram, Director of Galileo Capital, and John Campbell, Director of Chartered Wealth Solutions. Firstly to the guest, John. Warren, welcome to the show. I'm looking forward to the discussion we're going to have tonight. John, I'm going to start with you. As a backdrop to the discussion, what is financial planning and what is it not?
Financial planning is the process of developing strategies to help a client manage their financial affairs to meet their life goals. Which I think is, that's certainly, it sounds like a theoretical approach, but I think what's important is it's the process in developing a strategy to help you manage your financial affairs to meet your goals. Okay,
so it's a step. I know we're going to talk about the process in a little while. I think that the big thing as well is that we're living in a country with so much debt. Is financial planning debt counselling? Are they the same thing or are they completely different?
It certainly falls into it. There's no doubt that one has to consider your debts when you're planning. So it's all part of the, anything financial, anything in your life that relates to financial stuff is what financial plan looks at and what we advise on. Yeah.
Warren, from your point of view, when we have a look at financial planning or financial advice, it's quite an intangible product to try and go out there and position. How is it that you take it up with your prospective clients?
Well, I think when you're a client or an investor and you're looking for a financial planner, I think one of the things you need to understand is that you're speaking to somebody who should be sitting on your side of the table trying to help you make long-term decisions about anything related to your financial affairs. So typically what you're looking for is, almost in the medical terms, would be a general practitioner, somebody that can help you make the real decisions about your overall health, I guess, but in a financial context. And you're looking for somebody that's got a lot of knowledge and understanding about what they're doing and what you want and what you're looking for. So typically that would be the starting point when you're looking for a financial planner, somebody that's knowledgeable, somebody that understands the overall financial market, probably not a specialist. In other words, it's not somebody that knows everything about tax and nothing about anything else, but somebody that has an overall view of you and your life and what you need and how you go forward.
Okay, I hear a lot about helping, I hear a lot about guiding, things like that. For most people, their experience is probably they've been sold a product. Why is this not the case now?
Well, I think a product in most cases is a solution to a need. One has to establish what that need is. And in many cases, you can't do that in isolation. You have to understand the person's entire situation before you can advise on what product they should have. And in many cases, I think we have some of the large life insurers who produce products and people go out and distribute them. But when you embark on the financial planning process, you have to sit down and look at the entire process. And then at the end of it, once you've gone through the process, you'll then look for a solution to the problem, which may very well be a product.
Okay, so the product comes into it.
I think that what's important there is that, our history of financial or any kind of investment worldwide, not just here, is that it's been driven by distribution. It's been driven by big product houses trying to sell products to clients almost at any cost, as long as the thing is done. And our market is no different, but I think the point is that around the world people are becoming more savvy and they're starting to understand that there is a need for some kind of a guide or some kind of a coach or a general practitioner to help you make your financial decisions, and that's where the financial planning starts. But it certainly, as John says, it's not a product selling approach. It's definitely not that.
Okay, so now the product maybe changes shape. The product is the planning, the product is potentially the process. Let's talk about the process quickly. There's an internationally recognized, in terms of best practice, what they call the 6-step financial planning process that most certified financial planners should in some way, shape or form adhere to. It's also become quite widely recognized in the industry as the way to go. I'd like to break down some of those areas and really, from a viewer's perspective, just say, well, what is it should I experience from my planner at each step in this process, whether it be all in one meeting or spread over 6 meetings, perhaps, from that point of view. The first one is establishing and defining a relationship. Warren, in that first meeting, you sit down to the client. What is it that actually takes place?
I think that first meeting is really for the client to understand who you are as the financial planner. So the client needs to know that you've got some level of qualification, hopefully that you're well qualified, that you've got a certain level of experience. They need to understand as a client as well how you get paid. So are you there to charge by the hour, or are you there to be paid by the product provider? And then from the financial planner's point of view, it's to explain to the client, to understand from the client what the client's looking for from their life, what they're looking for from their money, and how whether they're worried about short-term savings, or if they're retired, how they want to manage their money. So it's really a meeting of minds meeting, to use the phrase. So it's really a place for both parties to try and understand each other, and then to see whether they can work together, whether it's worth their while to go forward.
Okay, and at this point, I mean, is there any advice given right up front from there?
No, I mean, I think traditionally you would find that's a good meeting not to provide advice, unless, I mean, if you're an advisor and you're meeting somebody for the first time, and you know they're about to do something obviously wrong or obviously stupid, it's your job to try and tell them not to do that. But that first meeting is really not to give advice. It's really just to try and understand each other first, and then start going from there.
Okay, John, I see you nodding your head. I mean,
yeah, I mean, what we call the first meeting is an interview.
Okay.
Really to see if what you're looking for I can offer, and if what I can provide I can help you with. I mean, I think is, so in many cases a client comes to us and they're looking for something that we can't help them with. And same thing comes down to personal relationship. So we're not immediately going to gel. Certainly I think a lot of financial planning, it comes down to personal relationship. And to establish where that could be the case. We might not be like-minded people. We might think differently, operate differently, in which case we're not going to do business together. Another thing which happens in that first meeting is formalizing the relationship. I think in most financial planning relationships in South Africa, there's not a formal agreement in place of, sort of like a service agreement. What am I going to do for you, and what I expect you to do for me? And I think, and in that forum where you then formalize the relationship.
Obviously, some disclosures coming into that.
That's
what are the types of things that clients should be, if not being told automatically, should be asking at this point of time?
I think the clients need to find out. I mean, if I'm a client and I'm talking to a financial planner, I want to know what qualifications that person has, and typically, there, obviously, the certified financial planner would be the premium standard that you would expect. You want to know how that person gets paid, how they're going to charge you. If you're a client, you want to know where the money is going to go, and so it's important there just to figure out, is this person going to be charging you by the hour? How much is it for every type of service that they offer? And then you want to understand just whether they're licensed. Do they have a FSP license? Because that's obviously, I mean, nowadays that goes without saying, but you need to ask the question.
Yeah. Okay, so I'm not happy with the fee I'm going to pay. I'm happy with the kind of person you are, whatever the case may be. We're going to the second step, which may actually happen in the first meeting, potentially, and that's developing goals and gathering information. Now, this is something that's always interested me. And John, I'd like to hear from your point of view, how many people have given adequate thought to what their financial goals actually are?
I think very few people. I think this is probably the most neglected step of the entire process.
Right.
I think if you look at goal setting, I think there's the needs versus wants. So once again, we have to establish what are needs versus what people want. I think the needs are the ones that we focus on, and try and educate the clients around that. And from there we gather, it's the quantitative information, so it's all the figures and all that sort of thing, and then we move on to the qualitative, which is your risk profile and your understanding of finances and that sort of thing.
Okay, let's talk risk profile quickly. I know we chatted about it briefly before. I mean, the tick box type approach to say, well, this is the type of risk profile. Is that an adequate guide in terms of finding out what type of investment or where I should be investing my money?
No, I mean, personally, I think, to ask somebody when you're developing a 30 or 40-year investment strategy, what's your risk profile, and to use that as a way of developing that strategy is absolute rubbish. I mean, if it should be criminal, it's not. But honestly, I mean, I think everybody's risk profile changes depending on their particular set of circumstances, depending on what the stock markets are doing at a particular point in time. So it's something that could literally change day to day. So I mean, if you're sitting in front of an advisor and one of the very first questions they ask you is, are you a high risk investor? I would probably be cutting the conversation short there and then, because it's nonsense.
John, your thoughts on that?
It's definitely one of the most important things to establish in the process is understanding what kind of risk a client can stomach. But certainly to go through 10 questions and for an answer to pop out at the end saying you are a medium risk investor means nothing in the whole scheme of things. And one has to look at the financial planning process once again and establish what you need as a return, and then to educate the client around what risk they may need to take on or not. And the client can then make the choice. Yeah.
Okay, so we've spoken a bit about goals, a bit of information around the risk profiling. What other information is critical at this point for you to then go off into the next step, which is analyze and evaluate?
I mean, I think you want to understand the client's actual financial position. So what are your assets? What are your liabilities, your debts? What kind of income are you earning, if you still are? And I mean, just any other expenses that you might have. And then also just to try and understand the person's investment experience, their investment history. So you want to understand how they view money. Money and psychology are tied up inextricably. So you want to make sure that that person's not too afraid of money, or if they are, you need to know that. So it's a lot more about just finding out the psychology of the person and the way it relates to their money, and then their hard numbers. I mean, you need to understand those hard numbers and their kind of expenditure that they want for the rest of their life.
Okay, more so what they're expecting out of their money at the end of the day. The next one, like I said, analyze and evaluate. We've put out those goals and we understand perhaps where we now want to go with our finances. That information gives us the opportunity to say, well, let's actually discover exactly where we are now. I'm assuming there's various financial planning tools, even if it's Excel spreadsheets that are used. What are the types of things we start looking for in terms of this analysis process?
I mean, I think most financial planners have a financial planning tool, and I think that that's something that one should go through with the client, because it's very much an interactive process. I'd use the example of where I've explained to a client that they may need to sell the house and plot to fund their retirement, and you find out that house and plot was actually inherited and it's in the family and they would never ever consider selling it. Now, so each asset that you speak about, and you need to understand the history behind it, why they have it, that sort of thing. Once you've gone through that process, you then, using the financial planning tool, will show the client their situation right now. So without giving any advice, we've analysed everything they have, and you show them a situation of what they have in terms of tax liabilities, estate duty liabilities, shortfalls in life cover, how much they need to invest for retirement, and from there then we'd move on to the next step.
Okay. When it comes to using these financial planning tools, which I think are critical in the process that John's just mentioned, a lot of people might look at it as the black box type approach. Whatever that spits out is gospel. Is that the case?
No, I mean, not at all. Like any tool in life, the tool is only as good as the person that's using it. So I think that's important. You know, you can put in rubbish into a financial tool and you'll get rubbish out. So your financial planner needs to have a solid understanding of what's going on. I mean, you should almost be able to reduce your overall financial position to a few sums on a piece of paper that you could do with a simple calculator eventually. And typically that should be the sanity check that any financial planner would do or would use. But the tool is just simply there as a guide to the financial planner, really, as a starting point to say this person's in a good financial position, and then for the financial planner to use that tool to explain to the client, to say, look, these are the parameters that you work within. You know, this is what stock markets do, and this is what your assets are, and this is what your expenses are. So if you do this, this is what's going to happen. If you don't do this, this is what's going to happen. So it's really an enabler for the client to make proper financial decisions with their advisor.
I think that's why I mentioned it's an interactive thing, because really it's like scenario planning.
Yep.
Let's try this scenario. What do you think if we liquidate that investment, or if we sell that block, that flat, or if we buy a townhouse? You're looking at a whole lot of different scenarios. And the tool enables you to give a client a picture of what the future may look like if they do the following things.
Okay, absolutely. Well, we've got to a point now where we understand where we want to go, potentially where we are now. Developing strategies and going about actually putting these things together is what you've started. But we're going to take a quick commercial break.